using the term volatility. Nobody used the term volatility on the way up. They only used the term on the way down. So I guess there's good volatility and bad volatility. I would say things probably now are less volatile than they were on the way up, because we were regularly seeing $3, $4, $5 days in silver. Now it's been a slow bleed of, $2, $3, 75 cents, whatever. But it's to the downside, so it's volatility that people don't like. Where we are now, we are in the bottoming process. This has lasted a little longer than what I had expected. But I want to tell people this is and we've had many, many of them since the year 2000, 2001, when gold and silver bottomed. We've had many, many gut checks, but this is just another gut check. And you've got to ask yourself, why did I buy gold? Or why did I buy silver in the first place? Do you know why you own gold or silver? Do you own gold or silver because it was going up or because you thought it was going to go up? First off, gold and silver don't do anything. They don't go up. They don't go down. They are a piece of metal that we've been fooled into pricing in fiat terms, in dollars, in yen, in euros, what have you. The way it should be, the price should be quoted is right now, the dollar is 1/4,000th of an ounce of gold. 25 years ago, gold was 1/300th. If you look at gold as being priced in dollars, it's not as shocking that the price is going from 300 to 4,000 or, 5,600, whatever the high was. But it is more shocking if you're looking at the dollar that's being priced by gold going from 1/300th to 1/4,000th. That's a complete and utter crash of what's the number, 93%, whatever, loss of purchasing power versus real money in 25 years. But yet, that's not the way it's viewed. It's viewed as, oh, gold's going up or silver's going up. And that's not the case. Getting back to the gut check, you need to go back to before the first time you bought an ounce of gold or bought an ounce of silver. Why did you do that?
Hard money advocates like to flip the usual framing. Rather than asking how many dollars it takes to buy an ounce of gold, they ask the inverse. How much gold does a single dollar actually buy? By that measure, a dollar bought about 1/300th of an ounce 25 years ago, and today it buys closer to 1/4000th of an ounce. To these commentators, that's a currency that shed more than 90% of its value against real money. Not gold getting more expensive, but the dollar getting weaker. Same underlying numbers, just read in reverse.
Were you worried about the finances of the U.S. government? Were you worried about the finances of the government, whatever country you live in? Were you worried about fiat melting down? Well, that's what has happened and has been happening for the last 25 years. So we get this pullback. People are pissing in their pants because 6 months ago, we were not even 6 months ago, 4 months ago, 5 months ago, we had much higher pricing or much lower pricing in the current currencies. Gold and silver were due a correction. They were absolutely due a correction. Were they due the correction we've seen? I think it's way overdone, especially in silver. But if you understand why you own the metal and what the purpose of having capital outside of the system, you should be able to relax a little bit. And if you have funds that are still in the banking system or still in the system, now is a perfect opportunity to get those funds out of the system, into metal, into your hands with no counterparty risk and no default risk. And that's the key, no default risk. We live in a world that is basically insolvent. I don't think there's a large central bank anywhere that is healthy. And I can say that because we know the U.S. Treasury / Federal Reserve are not in healthy positions. The Treasury now is paying $1.5 trillion in interest alone. That is the biggest category of spending other than, I think, Medicare. Or I'm sorry, not Medicare, but Social Security. It's bigger than defense. It's bigger than anything else. And it will only grow, especially if interest rates go higher from here. It's going to grow much, much faster. If you look at the Federal Reserve, they have a negative equity position at this point. I looked at it, I think it was 4 years ago, they had $65 billion in equity, and interest rates have gone up since then, and their bond portfolio has cratered. The number is what, $300 billion or whatever. So they've got a negative balance sheet. As far as other nations are concerned, what do they use? What do the other nations' central banks use as their primary reserve? They use dollars that are issued by an insolvent entity. So you're looking at a financial system literally with no foundation at all. And when this is all said and done, people are going to find out that the only monetary foundation you can have is something real. Now, it doesn't have to be gold, doesn't have to be silver. It could be a commodities basket, like the BRICS are proposing. But in that basket, they're proposing that 20 to 40% of that basket be gold. And then, of course, silver, and they're going to have oil, etc., etc. But the bottom line is, we've been living in a fantasy world for however long, because the currencies are nothing. The currencies are, they have no backing other than from the issuer, and these issuers are insolvent. We kind of hijack this and just say, from a broad view, this is not Bill Holter's opinion. This is not Dunnigan Kaiser's opinion. Mathematically, at this point, there is going to be a credit crisis. There's no ifs, ands, or buts about it. It's only a matter of when.
A big piece of the bullish argument leans on how shaky the institutions behind major reserve currencies look right now. Interest payments on U.S. federal debt have ballooned into one of the biggest single expenses in the government's budget, and the Fed spent several years in the red starting in 2022, technically avoiding a negative equity headline by booking the shortfall as a deferred asset instead. That said, more recent 2026 industry reporting suggests the central bank has started swinging back toward profitability. Still, hard money commentators point to similar strain across other major central banks and argue it all traces back to a dollar-centered reserve system they see as fundamentally overextended.
And you could question, how severe it's going to be. The severity is going to be 10 on a scale of 1 to 10, because the credit crisis is going to be centered and probably start. If it doesn't start, it doesn't matter. But once it gets to the U.S., that's it, because the dollar is the world's reserve currency. The U.S. treasuries are the foundation for basically the entire financial system. So this is not my opinion. This is math. The debt is going to fail. Now, with that in mind, if you know and I've told people this for the last probably month or 2 months, I get emails, I get phone calls, people nervous. Oh my God, gold's going down, silver's going down. Look at my mining shares. If you know what the ending is, you prepare yourself for the ending. Does it matter how you get there or what it looks like? You prepare yourself for that end because, as you just said, what the uses of gold and silver. The uses of silver are to get you to the other side once credit collapses, and the use of gold is so that you have capital when the system begins to reboot. You become a mini bank, if you will. You have capital when most, 99% of the other people don't have capital because they got wiped out in their credit-based investments. Now, you could say stocks are not credit-based. You could argue it either way. It doesn't matter. What I'm getting at here is you can have great stocks held at a broker that goes out of business, and guess what? You find out that legally those stocks were never yours. They were for your benefit, but they were owned by your broker. That's why you get the stock certificates. Jim Sinclair sounded like a complete, stark, raving mad lunatic in 2004, 2005, telling people, get your stock certificates. And then 2007-8 came along, and we were, 3 hours away on a Sunday morning or Monday morning to markets not opening and the whole thing melting down. Get out of the system. He was early, but he was right. And now the governments have codified that by saying, if you put money in a bank, you're not a depositor, you're a lender. If you put money into a broker, those stocks are owned legally by your broker for your benefit. Go into court and see how far you get suing a bank or suing a broker that took your funds to save their own ass. You need on an ongoing basis, and make sure you have a 6-month, year, 2-year supply of it, because you may not be able to get it. Going back to what you were saying about being lied to, everything is bullshit. The joke of the day yesterday was Besant coming out and saying, "Yup, all that gold's there." What did he do? Did he walk through and see a bunch of gold? The question then is, okay, so all the gold's there. Who owns it? Has it been rehypothecated? Has it been lent out? Has it been leased out? Speaking of rehypothecation, China, as of the 24th of this month, there will be no more rehypothecation of gold or silver in that country. And you go back to February, and China shut down multiple trading units. They were selling gold and silver short with naked contracts and above the approved limits, and those traders got shut down. As of the 24th, there's not even going to be a market to do that. They're shutting the paper market down. They are saying in China, with gold, with silver, it's cash and carry. No more futures, no more options. They'll offshore that to Shanghai, but within China, there's no more rehypothecation. Now, that gets done regularly in the United States on COMEX. You have entities that regularly exceed the approved limits. How many of these trading companies or traders, how many of them have you seen go to jail or be shut down or even mentioned? Now, if they were on the long side, they'd be shut down. But on the short side, no, they're not shut down, because that presses the price down, which helps the powers that be point at gold and say, see, gold bad, dollar good. And I know we're getting close to the end here, but I just want to tell you that, and if you haven't figured this out yet, I'm sorry, but everything we've been fed for many, many years, I'm going to say at least back to 2010, is bullshit. We've been lied to about everything. We have fake elections. Everything we're fed, unemployment numbers, inflation numbers, blah, blah, blah. It's all bullshit. It's all made up to fit the narrative that everything's good. And everything's got to be good until it's not. And when it's not, and the shit hits the fan, you're either going to have gold, you're going to have silver, you're going to have mining companies or commodity-oriented companies that you have the certificates for, or you're going to have nothing. And you will be a slave to the government that's going to come in and say, oh, don't worry about it, we're going to save you. Here's your CBDC account. We're going to put money in it each month, your universal basic income, blah, blah, blah. Until you and I do an interview like this, and they say, you two are shut off. That's what's going to happen.
There's also a China angle commentators bring up. Reports of Beijing cracking down on unbacked short positions and rehypothecated metal in its domestic gold and silver markets after earlier moves against trading firms that blew past their approved short-selling caps. The comparison they draw is to Western exchanges like COMEX, where, in their telling, regulators go much easier on outsized short positions than they do on comparably large long ones. The bigger claim behind all this, that paper trading can artificially cap prices below what real-world scarcity would justify, is still very much an open debate rather than settled fact. But it's a load-bearing assumption in how this crowd reads the market right now.